Welcome back to the Boss Too Hard podcast, where we dive deep into the turbulent ways of entrepreneurship. Today, we have on as our guest Dr. King McCray, who is the financial doctor, who is going to let us know everything that we should not be doing with our money as entrepreneurs. So, King, welcome to the Boss Too Hard podcast.
Thank you. I truly appreciate it. Thank you for having me.
Of course, I'm like, I'm just going to invite him. There was no text. There was no email like, hey, this is headed your way. So thank you for responding.
Absolutely. Anytime. I'm always here to give as much advice and clear understanding as I possibly can when it comes to finances.
So I think that's one thing when I first met you that was so easily established was your authority. It's very easy to build rapport with you, and you're so transparent that there was no aspect of, can I trust what he says, right? Which is completely opposite of our regular doctors.
Right.
So tell me, like the financial doctor, I know you have a doctorate in business, a doctorate in finance. What has the journey been to get to here?
It's been a rough road, right? So, entrepreneurship as a whole is one of those things that if you're gonna jump in it, right? Just like the hat says, just do it, right?
Yeah.
You gotta jump into it and really figure out what's gonna work the best for you.
Yeah.
For me, it was failure, stumble again, get back up, more failure, and then I finally figured it out, right?
Okay.
So I actually started my first company at 20 years old. And for me, that was like, I'm going to be the next, I was about to say P. Diddy, but he's got a lot of stuff going on right now. So let's not say that. Then I was going to say Dame Dash, but he's not even better. So let's say the next Jay-Z, right? The music mogul.
That's where I was going.
There
like Jay-Z, yeah. He's good.
All right. So the next, music mogul, I had a lot of artists that I knew back in the day. So I was like, I'm going to start this marketing and music management company, go out here and make it work. Started working for, a good period of time. Entertainment company, got it up and running, started marketing other artists and things of that nature. But then I realized that was not the space for me. So ended up jumping.
Any particular reason why?
There's not a lot of money in it up front because there's a lot of pushing out money and making sure that, hey, these artists want to get paid up front, so you got to come out of pocket to do so, or you got to go market the individual. Well, I'm marketing this individual and they haven't paid me yet because maybe I'm getting paid off the door.
Got it.
So on and so forth. Right?
All makes sense. Yeah.
So I actually ended up moving back in with my dad. Shout out to my dad, Pops, I love you. And he gave me $200 because at the time I was just dead broke. He gave me $200 and said, hey, go out, get your business license, go figure out what else it is that you want to do. I had an opportunity at that time to actually open up an insurance agency. So I'm talking old school insurance agency. Like, you guys need some insurance? Knocking on doors, making sure I go around, really trying to get it to work for these individuals. Had a great stint with Nationwide Insurance, had a great stint with Farmers Insurance, built those businesses up. And then at 25, the bottom hit for me. Okay. And as an entrepreneur, I don't ever mind telling this story because for me, it's crucial that people understand that I'm human. No matter where I am today, I had struggles. Right? Success
is a journey.
Absolutely.
That's what this is all about.
Yes.
Like, can we normalize the journey and not just the destination?
Right. And just to pick, to kind of pivot a little bit from that, looking at the road less traveled, that's where most people want to go. Okay. But they don't take that road because they love comfort too much.
Yeah.
So in order to be an entrepreneur, you got to get uncomfortable. You got to go outside of the box, right? So most people want to take that road less traveled, but it's not for everybody. But in that time period, right? So getting back to the story here, 25 years old, I filed for bankruptcy, Chapter 7, because I had so much debt. I had less money in my bank account than I could actually earn on a consistent basis. So I was never getting out of the negative. I was going from check cash in place to check cash in place to check cash in place, right?
Yeah.
Paycheck after paycheck after paycheck. As soon as I get my paycheck, I'm going to the check cash in place to pay them back and then re-up for another loan. We're talking 300% interest, 400% interest,
that's insane.
right?
Yeah. Predatory lending at its finest. Let's just plug that in there.
You guys suck, by the way. But, at that time, it was what I needed to realize that I have to take a chance on me and I really have to figure this out and figure out what works for me. So I went outside the box again this time, right? But what I did differently is I went to the people that I wanted to be like. Okay. And these are the things that I try to teach people now is if you're the smartest person in the room, we heard it all the time,
You're
go
in
in
the
a
wrong
different room,
room. Yeah.
right? If you got the most money in the room, you definitely need to go to another room.
Yeah.
But at the same time, your network is your net worth, right?
Yeah.
So the people you hang around could quite naturally be a crutch for you or an ankle weight, right? And they're holding
Yeah.
you back. So I ended up, having a mentor that showed me, for lack of better words, the game and tried to understand how the business world works.
Mm-hmm.
For me, it's a little bit different in my struggles because I'm a minority, right?
Mm-hmm.
At the time, I was living in Nashville, Tennessee, predominantly white
Mm-hmm.
area. As a young Black male trying to be an entrepreneur, it just wasn't working for me.
Yeah.
So I took the biggest move of my life and I moved down here to Florida. Okay.
Where are you from originally?
So originally from Lansing, Michigan.
Okay.
Lived in Nashville, Tennessee a good majority of my life. Ended up
Mm-hmm.
going to play basketball at Austin Peay State University. Then from there, got out of school. More and more studies, more and more school. Again, just climbing up the ladder there. But in 2017, we made the shift. We made the biggest jump of our lives. Packed up my whole family,
Mm-hmm.
just me, the wife, and the kids. Everybody moved down here. Literally knew nobody down here. But again, it was getting uncomfortable. It was realizing that there's more than just the circle that I was in of people. I needed to branch out. So with that change, I was able to network with the 1%ers of the world,
Mm-hmm.
right? I was able to find the right circles and understand how to leverage relationships, right?
Mm-hmm.
How to use other people's money, how to use the relationships that you have to kind of get to the next level.
Yeah.
Because I have something that everybody wants, okay? But everybody else has something that I want as well,
Mm-hmm.
right? I teach people a concept that I didn't come up with. I just make it look sexy.
I love it.
Is that there's 3 currencies in life,
Mm-hmm.
okay? There's time, there's knowledge,
Mm-hmm.
and there's money.
Mm-hmm.
Most of the time, we have 2 of those, and we're always chasing a third.
Yeah.
For a majority of us, we have knowledge and time, so we got to use those 2 to go chase money, okay?
Call it time, talent, and treasure.
Yeah, see, there you go.
Got that alliteration going.
Yeah. But when you focus on those 3 pivotal points and realize that currency is great, right? The actual hard dollar is great,
Mm-hmm.
but there's so much more that comes from it. I tell people, yeah, we hear, knowledge is power, which is great. It is. I'm going to give people a lot of knowledge today.
Yeah.
But until you apply the knowledge that I give you, it's not going to make a difference.
Absolutely.
Right?
Mm-hmm.
So that's what I did. I applied my knowledge, all my expertise that I had. And at the time, I had plenty of time because I wasn't working. So I had to figure it out.
Yeah.
Right? So I had time and I had knowledge and I went out and I got money. Okay? So to go from a 25-year-old, at the time, divorcee, young and dumb, file bankruptcy.
It's okay. We've all been there.
file bankruptcy to now 37 as a multimillionaire is insane to me.
Mm-hmm.
In that time frame, I hit the $1 million mark at 35 years old. So it literally 10 years later, by following a path and a blueprint of, you got to think outside the box. You got to be able to network with the right people. Go ask them what they're doing and how they're doing it. They're willing to tell you because they want to talk about themselves.
Yeah.
Right? People come to ask me, I'm going to give you a story. Like, sure, I want to talk about myself now because I'm there.
Right.
Right? When I wasn't, I was like, no, I'm not going to tell you that.
Right.
I'm not going to give you that much insight. But now I want to make sure that we all are there. So if you push yourself outside the box and you make sure that you have these type of conversations, right? You realize like, okay, what am I doing wrong? What's the feedback that I can get? How can I be better as a business owner, as an entrepreneur? What's something different that I can do?
I think one of the things that we need to stop worrying about as entrepreneurs, because you're farther in your journey than I am. And early in my journey, I came to you and you spoke some real life over me and my husband because we were both, just trying to figure out what this entrepreneurial journey was going to look like for us. And I think one of the things that we have to get over at any point in our journey is the fear of being embarrassed.
Oh, yeah.
Because some of the things we're going to talk about are embarrassing. Some of the misconceptions that we carry are embarrassing.
Yeah.
And sometimes you're going to be at the table with the right people and use the wrong fork, and that's going to be embarrassing.
Yeah, this is true.
But nothing good ever comes out of that comfort zone. Like if you continue to do the same things that you're always doing, the same people, nothing's going to change.
Right. So the definition of insanity, right?
That's not the real definition.
I know, but still. But when we look at it, right, doing the same thing over and over again, expecting a different result, right?
Absolutely.
But the biggest thing that I can tell you about that and what changed me was the fact that a Gucci wallet and a wallet from Walmart is going to hold the same money and credit cards in it, right?
Yeah.
A Gucci belt and a belt that I got on as Nike, right? Or a simple belt from the Dollar General store or whatever it may be is going to hold up the same pants, right?
Yeah.
A bet that we have, whether you got Egyptian cotton sheets or if I got, hard
200 thread
seats,
count.
little
mainstays,
seats,
Walmart.
but at the same time, we're both going to get sleep, right?
Yeah.
So at the end of the day, I have to look at those individuals as, yes, you may have more in a monetary or a material possession than me, but at the end of the day, you're the same person I am.
Yeah.
All right. You blood, you shed blood, right? You shed tears, right? You sweat, you get in uncomfortable situations. So what makes you different? And the biggest answer that I learned is it's that individual person themselves.
Yeah.
Because at the end of the day, right, we all, as business owners, right, every entrepreneur out here, you're going to sell the same product, okay? Yeah. You're going to sell the same service. But the thing that makes you different is yourself.
Yep.
People don't buy from me and they don't come to me because I got crack in my sugar or whatever it may be, right? It's not they come to
crack
me.
In your sugar.
It's not that I have something that's just so special that they say, hey, I'm going to come to you. It's because they genuinely just love me.
Yeah, absolutely. I think that a lot of people, one of those issues that they have with starting businesses is that, it's oversaturated. Somebody's already doing this. Whatever the excuse, because that's what it is an excuse that you want to make. The reality is that it's not you. You're going to have a different process. You're going to have a different positioning. You're going to simply just look different than other people.
Right.
It's like, just do it.
Yeah.
I love the hat. I've tied the two together when
See?
you said
That's
that.
why.
It's messaging, branding right there.
That's it. But the thing is, even if you're going to get into an industry that is oversaturated or somebody else is doing, the biggest thing is don't recreate the wheel. Just put some spinners on that thing.
Yeah.
Right? Make it stand out.
Yeah.
What's different?
Yeah.
Okay. And obviously that's who you are. It's the person. It's the personality that you bring. It's the charisma. It's the charm. It's the knowledge. It's the information. Because I can give the same information to people, but I just do it in my own way. And people love the fact that I can, for lack of better words, I dumb down any information that I give.
Oh, absolutely.
Because I don't, I got the high IQ, right? I got the degrees, but people don't want to hear those astute words, right? They just want to know, hey, how do I not pay taxes? How do I make more money? What's going to make my money make money? Like, those are the things they want to know.
So I'm still learning, right? And there's different things, and 3 years into the journey, we've come so far.
Yeah.
Like, it's just I'm so grateful to be where I'm at. Thank you.
Because I know where you started, and to see where you are today, I'm very proud of you.
It's hard work and it's daily action, and I say it all the time, but actions lead and feelings follow. But I never had a more pissed off group of people than when I was sitting with my friends. And they were all complaining about having to pay taxes. And I looked at them and said, so don't pay taxes. Yeah. They're like, what do you mean? I'm like, I own a business. I have gotten thousands of dollars in return every year. I haven't paid taxes in 6 years because I was a contractor before that. And so it was like, stop complaining about it and do something about it. But they were so pissed off by that simple statement. Don't pay taxes.
Yes.
Like, learn how. Stop complaining about it and do something about it.
Yeah. No. I mean, the one thing that I find with taxes is this. Everybody wants to pay their fair share, but not $1 more. And that's okay.
Yeah.
Like, I don't want you to pay $1 more. Like, my clients come to me and they ask me, how much do I need to pay in taxes and how can I pay less?
Yeah.
Great. I have the answer and solution to both of those.
Right.
Right. But I'm going to make sure you pay your fair share. And I'm going to make sure that let's all look here. There's an invisible line in the sand. I'm never going to cross it, but I'm going to put my tippy toe right on the edge of it because I got to give you everything you can possibly get. Yeah. Right. The tax code has over 77,000 pages. The average taxpayer, the average consumer, the average spender, buyer is not going to read that.
No.
So the thing is, we're not an expertise, we're not an expert in all things. So go to an expert that is, right?
Absolutely.
So that's where we pride ourselves on, is because we have looked at the tax code. We understand the tax code. We understand the nuances and the things that you can change inside of it and the small little tricks that a lot of people just don't know how to do, or even if you know how to do it, right? Because these TikTokers and YouTubers and Instagrammers and everybody else out here,
to that.
Every influencer out here in this world thinks they know what they're talking about. They give you the information, but they don't really tell you how to do it.
Yeah.
Okay. That's the difference, because people will get the information. Oh, they're like, oh, okay, yeah, I can go pay my kid, and they pay their kid and they don't do it properly. Well, that's the whole point. You have to find somebody that's going to walk you through the steps and give you the actual directions of it.
So this is basically why I wanted you on the podcast. I know you're a wealth of information, and there's a lot of people out there trying to figure it out,
Mhm.
and they're doing more harm than good.
Absolutely.
And and I would just want to put this out there, just like you want someone to pay you for your expertise, you got to be willing to pay for somebody else's.
Absolutely.
Like, really and truly, the coaching, the mentorship, the investments you make into your business
Mhm.
are just that. They're investments, and you get what you put in.
Yes.
And so there's a lot of information. There's a lot of people talking about credit. There's a lot of people talking about business loans. There's a lot of people talking about real estate.
Mhm.
And I can't help but listen and wonder, like, this seems too easy. Like, there's something they're not telling us. This doesn't seem legit.
Right.
How much of it is actually legit?
That you see on the internet?
Yeah, because we believe, everything on the internet is
Everything
true.
on the internet is true. I would honestly say, 90% of it is true.
I was going to say, this is a safe place. You can be honest.
90% of it is true, but the issue is they don't give people the full picture, so therefore only 40% of it is actually ends up true on the internet, right?
Okay.
Because you have to give people the full picture. You can't just tell people, oh, hey, go put your stuff in a trust, and not give them the full information on how to do it and do it properly, right?
Yeah.
They start doing these diagrams and, shifting stuff over here, and you got to do this, that, and the third.
You can be just like the Rockefellers.
Right, but no, because you got to meet a certain income threshold to do a lot of these mega backdoor Roths and things like that. Like, there's multiple layers to what you have to do in order to make that work, right? There's documentation, there's paperwork, there's paper trails that you need to have. And that's where people just end up getting into really bad situations, is that they find these things that are on the internet and they say, okay, I'm going to go do it. And then the IRS comes back and say, okay, prove to us how you got here. And, oh, I don't have proof. I don't know. Now you got to pay penalties and interest on top of the tax that you got to pay.
I was going to ask you, so from the financial doctor, what happens when you really get in trouble with the IRS? Like, what happens when you get audited? What happens if your ducks are not in a row?
You know what? I am glad that you asked that question. And I'm being honest when I say this. Nothing. Okay. I'm dead serious.
I know. I so dislike you right now.
It happens every single day.
Yeah.
I get a client that emails me, hey, I got this tax notice, and they're freaking out. The IRS just wanted you to verify a number because you missed, the number was typed in wrong. It was given to us incorrectly, or whatever it may be. Stop freaking out. Like, most of the audits, I would say 95% of all the audits are desk audits, which is them just verifying information. Mm-hmm. If you put down and send it to me that you had a 1099 that said it was $100, but the 1099 that got sent into the IRS was $600, well, unfortunately, the wrong information was given. They just want to verify the accuracy of the information. That's all it is. But the average person sees IRS, the alphabet boys, right? One of the alphabet boys is coming at me now, okay? And they start to freak out. It is really not that big of a deal. I get letters all the time from the IRS, and it's just verifying information.
So I was in this situation once.
Okay.
Where I went into a business, and they had actual auditors in their business going through paperwork. So how often does that actually happen? Because I was like, this only happens in movies. Like, what's happening here?
Yeah, that is more so for the individuals that are being shady.
Got it.
The commingling of funds, personal and business funds, saying they have all these deductions and credits and they really don't have them. But that's why I say a paper trail is super important, right? If I'm going to lease my vehicle to myself, I'm going to have an agreement, right? I'm going to have a lease that says, hey, here's a lease between myself and my company. Here's the terms of that lease. Here's the price of that lease. Just like if I were to go down to Infinity, BMW, whoever it may be.
Yeah.
There's a paper trail to it, right? Then in addition to that, I put the tax code that allows me to do that with it.
Yeah.
See? So all they can say is, okay, how did you get there? Here's how I got there. Here's a tax code that goes with it.
Yeah.
Okay. And they walk away, right? And they leave you alone. As long as you have the paper trail that goes with it and the tax code that goes to that law, or even the court that was the court case that was won against the IRS, as long as you have that information that ties into every type of tax strategy that you're doing, there's nothing that they can do.
So our tax, so I know there's a lot you can do with tax
Oh
strategies.
yeah.
So are the tax strategies like leveraging those? Is that the first place of building wealth? Because I have like 5 questions I want to ask you right now. I'm trying to figure out what to prioritize.
Yeah.
So let's go there for a minute.
Okay.
And so when we talk about, I don't know if it's not necessarily saving money, keeping more of your money. Um, is it really like the tax strategies where you still want to start with, or like what does that even look like?
Yeah, so it's a combination of things, right? So, and I'll break it down to to you like this. I can give you three strategies right now that probably save you anywhere between $70,000 and $100,000.
Got it.
Okay,
Let me know. It's
super
being
quick.
recorded.
Yeah, super quick, right? First things first, it's called an auto lease. All right, I just talked about it.
Hmm.
You set up an auto lease between yourself and your business. Well, how do you
Hmm.
set that up? Well, if you are the owner, employer,
Hmm.
right? You're also an employee of your own organization. You set
Hmm.
an agreement between your employer to say, hey, I'm using my personal vehicle that I own to go out and market your business and to work in your business. So in this case, I want you to pay me X amount of dollars, okay, whatever it may be.
Hmm.
2.5% of a $40,000 car is $1,000 a month. So
Yeah.
your business is paying you $1,000 a month tax free because it's a reimbursement because it's your vehicle. Okay.
Does that only work if you're an S corp?
Yes, it does.
Got it.
Correct.
But if you're not
But
if
if
you're
you're
an
not an S corp, you
LLC,
can't do it.
got it.
Right.
Okay.
So,
Keep going.
so again, like I said, little small tweaks there, right? So that's $1,000 right there. That's $12,000 in taxable income that you just saved.
Hmm.
Okay. Because what's going to happen is the offset happens where some people are going to be like, oh, well, that's income they're paying to me. Yes, true. It is.
Yeah.
But the offset is you also now get to depreciate your vehicle on your personal return. Most people don't ever do that. Don't ever understand how it works. You got 5 years that you can depreciate that vehicle.
Hmm.
Now, let's say we're in 2024. Right now, you can technically buy a new vehicle right now and depreciate 60% of it up front because of bonus depreciation. Trying to just give y'all a little game, just a little bit, okay?
Is that why Chevy wants me to trade
That's
in
why
my
they
car
want
so bad?
everybody to go get new cars right now. Because if you own a business, it's actually a pretty good opportunity for you to do so.
Okay.
Because again, you can depreciate 60% of that vehicle. So, for lack of better words, I'm just gonna say this out loud, baby. Don't be mad at me. My wife wants to buy $100,000 Infinity QX80, the brand new one, right?
Mhm.
Well, if I go get it, I get a $60,000 deduction.
Yeah. Does that over 6,000 pounds rule apply to that too?
Yes, because it's
Okay.
a large SUV, over
Yeah.
6,000 pounds. Now,
See, I've been trying to do my homework. I've been trying to listen and read.
Smart. So that gives me an opportunity to have a $60,000 deduction. Let's say if I go out and get that vehicle, right?
Mhm.
Then in addition to that, I get a $60,000 deduction plus now I'm being paid $2,500 a month from my company
Mhm.
for this vehicle. See where I'm going here?
Mhm.
So it just ends up saving me more and more money.
Mhm.
Now, everything I do inside that vehicle now becomes a tax deduction. Okay? Oil change,
Mhm.
gas, tire rotations, windshield wipers. Go get some air fresheners for the car. You now get to write
Yeah.
that off on the business because the business is leasing your personal vehicle from you.
Okay, so what about where does mileage come
Mileage
into?
doesn't have to come in because you have a lease agreement. So you don't have to track mileage anymore. And you're
Got
getting a
it.
bigger deduction by having the reduction in the price, right? Obviously on your business tax
Yeah.
return,
Yeah.
plus the depreciation that you're going to get. That's basically 2 deductions in one.
Love it. Okay.
Okay.
Third strategy.
So no, that's still just a one
Oh.
strategy. That's one
What?
strategy coupled with 2 things, right? You get to
Okay.
write off everything that you do in the vehicle plus
All
the
right.
auto lease itself. Now, where do you start your day? You start your day every day for the most part, for most people, at their home.
Yeah.
I wake up in my
Right.
home. Most people, even if you have an office somewhere else, you
Mhm.
have a home office.
Right.
So, hey, employer, I have a home office. Based upon this square footage and what I do and what I pay for this home office, you need to pay me X amount of dollars for that. That is a true reimbursement.
Mhm.
That's not income, okay?
Right.
Because you're using your own space.
Mhm.
That could be an additional $500 a month. That's $6,000 a year,
Yeah.
okay? Now, but also there is one rule that a lot of people forget about, and they hear about it, but they don't know how to use it properly.
Mhm.
It's called the Augusta rule.
The what?
The Augusta rule.
Augusta, like
Augusta,
Georgia.
like the Masters,
Okay.
right? That's
Got
what.
it.
So the Masters rule, the Augusta rule, right? So you have the ability to rent out your home for business meetings. You have up to 14 of those you can do per year. So if I rented my home to my business to do a meeting, right? It could be our monthly meeting or semi-annually meeting. I'm just
Mhm.
going to have a party, networking event in my home, whatever it may be.
Mhm.
$1,000 per meeting, let's say. That's $14,000.
Mhm.
14 plus the 6, plus a 12, plus everything else that you had in your car, plus all that gas you had to get. Okay, depending on the size of the vehicle, the car you purchased. Again, I just saved you $36,000 to $70,000 in taxable income. That was what, 2 minutes? Time? Yes. So
we'll send you a bill later.
But those are the little things that people just forget. Again, but it's all about the paper trail, making sure that you have all the documentation that you need, making sure that the ducks are set up in a row properly, right? If you're going to do the business meetings, make sure you have an agenda, make sure you have an agreement with the business to do it. Those type of things, a roster of attendees, that type of jazz, right? Most people are just throwing it on their tax return. So the IRS is coming to the door like, hey, where's the roster of attendees for this business meeting that you had?
Yes. What happened in your house on April 26th?
Yeah. I can't give it to you. Okay. What happens? Now they slap the taxes on.
Yeah.
That's the penalties and interest on top of that. Now, the IRS is petty. I'm telling you right now, IRS is petty. They will wait 3-4 years down the line to even come at you. Okay. They will wait that long and say, oh, we're going to go back to that year and test you out and see what's happening, right? Because penalties and interest will add up from the day that you filed that tax return.
Oh, that's just dirty.
Then on top of that,
oh wow,
they then have 10 years to collect that money. So just saying, don't shoot the messenger.
Right. Okay.
I know it's a lot to take in.
So all of these strategies, I mean, there's a lot there's a lot of strategies happening here, but the reality, do I want to go here yet? Yeah, we'll go here yet. Is that in order for your business to pay a lease, in order for your business to pay to rent your home, in order for your business to pay your kid, your business has to be making the money to do it.
Technically, yes.
Oh gosh. Okay. So we're going here. So, what's the technically?
Yes. So the technicality is most businesses up front don't have the money to do so. So where do they get the money from?
Yeah.
From themselves, right? So it's called a capital contribution. So if I wanted to reduce my W-2 income, let's say I started a business and I want to reduce my W-2 income. How can I do so? Well, I take my W-2 money that I earn, right? Whatever paycheck I get, I take a portion of that money and I give it to my business. I own the business, so that's now a capital contribution. That increases my basis. Okay. I then pull those strategies that I just told you about and I take that money back because I got to operate my business. So I just use W-2 income to fund my business, right? And then I take those strategies out and do all those things that I need to run my business and I give it back to myself. I just reduce my W-2 taxable income.
Okay. So let me make sure I understand this right. Real life situation, guys. Real life application. So I own a Chevy Traverse.
Okay.
I drive that thing everywhere. She's my ride or die. Business, personal, whatever. So my car payment, I currently pay myself. I'm not an S corp.
Okay.
Right. So I'm still LLC. I'm working. I've heard.
Just send it to me. 2553. One page. Boom, boom, boom. We get it done.
So, well, I heard it was harder than that. And there's the application process. Okay.
No. Okay. Let's debunk that myth right now. Okay. It's one page. Okay. Well, actually, 2 pages. It's a 2553 form, 2553 S Corp election form. On the first page, you just put your information for the business. On the second page, you put who's the owner. You sign it. You send it to the IRS.
Okay.
They then send you an approval letter. It is simply that easy.
Okay. All right. Well, so if I was an S Corp.
Yes.
And if I was paying myself on a W-2.
Reasonable compensation is what she's saying.
Yes. I would be able to write a lease from my personal for that my business is going to lease my Traverse.
Correct.
And then out of my W-2 income as the owner of my company, the cost for that lease, I would then just take that and put it into my business as a capital return. And it's just like circulating funds of tax goodness.
Yes. But there's a caveat to that, though.
Okay.
And you said it earlier. Business has to be making some type of money.
Yeah.
You can't just be giving capital contributions and just taking the money back out. At that point, it's a hobby, and now that's commingling funds.
Yeah. So this is a segue
yes.
Into what I wanted to talk to you about.
Okay.
And it is the commingling of funds.
Yes.
And I would like to keep this a lot of businesses. So this audience is a lot of entrepreneurs.
Okay.
just a lot of entrepreneurs that are just starting out, a lot of
Mm-hmm.
people who are still just operating as LLCs and
Okay.
maybe even dipping their toes into
Okay.
the entrepreneurial journey.
Mm-hmm.
So for this perspective, you're starting a business,
Mm-hmm.
you've just got an LLC.
Mm-hmm.
Money gets messy really, really quick.
Yes.
Let's talk about it. You're going to lead the conversation, but personal business, like it's just messy.
Yes. It's ugly.
Oh,
It's like baby mama, baby daddy drama. It's real ugly. Okay.
mm.
So, to all of the viewers and listeners out there, don't be like me. Okay. I was that guy. I was commingling funds. And then I got hit with an $80,000 tax bill. Okay. Because I had no way to show proof. I was just dumping money, pulling money here and there and saying, yeah, that's a write off. That's a deduction. And this, I'm going to just take this money and put it over here and that whole jazz. Right. Worst thing I could have ever done.
That was your public service announcement from Dr. King McCray, the financial doctor.
So, but in all seriousness, right? So if you're going to start a business, there's a couple key things that you need to do to make sure that you don't have commingling of funds.
Mm-hmm.
Number one, obviously, you got to get an EIN number and make sure that you actually start the business, right? Articles of organization, EIN number.
Mm-hmm.
If you're going to become an S Corp, you file the S Corp election,
Mm-hmm.
right? Step two is going to be opening up a bank account. Okay, not using your bank account, but opening up an actual bank account
Mm-hmm.
in that business's name.
I would say a business bank account.
Absolutely.
Okay.
In that business's name, right? Then of course you'll have a debit card for that business. And then of course feel free to get a credit card. Get the points, the mileage, whatever it may be, right? We can talk about that type of stuff all day. But from there, you also need to get a accounting software, right? Most people use QuickBooks. I love QuickBooks,
Mm-hmm.
right? There's other ones out there. I'm just gonna throw a shameless plug. QuickBooks, it's great. But there's Wave,
Bench.co, check them out.
Yeah, bench.co. Yeah. I mean, there's a ton of them that you can utilize.
Yeah.
But what happens is it now allows you to keep track of the actual transactions that are happening. Yeah. Okay. It allows you to have the actual deductions, and you're not having to commingle the funds. Now, if you give funds to your business, that's okay. That's a capital contribution,
Mm-hmm.
right? But don't have your business paying for your personal expenses. Because at that point, if you count it as a deduction, you're going to get in trouble. But if you happen to do it one day, because it happens, right? Sometimes I forget a card and I'm just like, you know what, let me use my business card. But when I categorize it, that's a shareholder distribution. That's a distribution that I took out from my business. So I will get taxed on whatever that amount of money is.
And if you are operating as an LLC
Mm-hmm.
and you are paying yourself, it's always a shareholder distribution, correct?
Yes, that
Okay.
is correct. Yes. So,
should you get a 1099 at the end of the year?
From your own business?
Yeah.
No.
Oh, okay.
Because if you're a single member LLC, right?
Mm-hmm.
So let's talk a little bit about entity structure. If you are a single member LLC, the IRS considers that a disregarded entity, which means that you're just a sole proprietor. So most of the time it's tied to your social security number.
Mm-hmm.
Okay. But you have the option to also get an EIN for just that business,
Mm-hmm.
but it still shows up on your personal tax return. It's on a
Mm-hmm.
Schedule C on the personal tax
Right.
return. The only way that you create that difference, okay, or that divide there is if your business has a partner. Now your partnership, you file 1065. That's
Mm-hmm.
the tax return you got to file there. Or you become a C Corp, okay, which is a completely different separation, right?
Mm-hmm.
C Corp pays its own taxes, then you pay your own individual taxes.
Mm-hmm.
Now, most people think S Corp is an entity type, but it's not an entity type. An S Corp is just you saying, hey, IRS, I want you to tax me as an S corporation. It's just a classification status of taxation.
Mm-hmm.
That's all it is.
You're just out there telling the government what to do.
Basically.
Got it.
Yeah.
Okay.
So the IRS looks at you either as a sole proprietor,
Mm-hmm.
partnership, or corporation, meaning C Corp.
Okay.
Taxation is, how do you want to be taxed? If you look at the forms, the S Corp section is always in tax classification status.
Mm-hmm.
S Corp. Check that box, right?
Mm-hmm.
Obviously, if you get the approval when you file the 2553, if you need how to file a 2553, just come to me. But that's how it works, right?
Mm-hmm.
The S Corp is the most tax advantageous opportunity for business owners because there is zero taxes at the corporate level.
Yeah.
You only pay it at the personal level. So everything flows through to your personal tax return. So if my business takes a loss, that loss will flow through to my personal tax return. If my business has a profit, it will flow through to my personal tax return.
Okay.
The reason why you solo entrepreneurs out there need to do this is go to S Corp route, right? Is because there's this thing called self-employment tax. That is 15.3%. So would you rather pay the 15.3% Or would you rather go S corp and not have to pay the 15.3% and only pay your ordinary income tax bracket?
Mm-hmm.
I just want to pay my ordinary income tax.
Right. Right.
We just went there.
That's a lot. That's a lot. I think the biggest takeaway, like, from this conversation is that you've got to be willing to go to the experts. Like,
Yeah.
if you want to do things right, if you want to get ahead, you've got to be open to mentorship, coaching,
Yes.
looking for advice,
Yes.
having the embarrassing conversation.
Right. And one of the things that I would say, because I want to put a full disclaimer out there, and then I want to put something behind that disclaimer. So a lot of clients will come to me and ask me, "Are you a CPA?" And I straight up tell them, I'm like, "No, I'm not.
Mm-hmm.
I'm an accountant. I'm a financial advisor. I'm a financial coach. I'm not a CPA." The reason why is because I got more schooling. Okay?
Yeah.
I have a Ph.D.
Yeah.
And when I tell them that, they're like, "Oh, okay. Well, okay, let's continue." All right. So I tell people I have a Ph.D., which is a lot more schooling than a CPA.
Absolutely.
I just simply didn't. All a CPA is just that they went to go take a test to test the measure of their knowledge.
Mm-hmm.
Right. For me, it was I went to school and studied for a stupid amount of time to make sure that I understood all aspects of finance.
Yeah.
Because I got to be able to break it down to you from an economical standpoint.
Right.
I got to be able to break it down to you from a behavioral standpoint.
Yeah.
Right. Taxation, you can learn that along the way as you do study.
So much of how we spend our money is behavioral.
Exactly.
And that's where the coaching piece comes in.
As another disclaimer, I am a BFA, which is a behavioral financial advisor. That is a designation that I do have. I did go study for that certification wise. Right.
Oh, wow.
So I understand why people spend money the way they do. Okay. I teach courses on this because it's important for people to understand why you spend money, why you are financially obese. That is a thing. Okay. It is a thing to be financially obese. I just want to let you know that. Okay. It is a disease. I promise you it is. But the disclaimer that I wanted to put behind that is, yes, I have a PhD, but I also have over 20 CPAs on staff. Okay. I got another probably 20, 25 EAs on staff, which are enrolled agents. These are the only individuals that can actually represent you in front of the IRS besides a tax attorney. So I have a staff of over 100 employees. So I got somebody that knows something if you want just designations, but I got plenty of designations myself.
Yeah.
But I tell people it's not always about, hey, are you a CPA? Are you a CPA? No. What knowledge do you have? How can you assist me? What's the proof behind that? Right?
Yeah.
Every single year we save over $100 million for all the businesses that we have. That's the proof, right? We do no marketing.
Yeah.
They market for us.
Right.
So when you look at it from that regards, okay, you have to understand that it's not always about what you know, who you know. It's about who knows you.
Well, you kind of stole my thunder. So we have this moment here on the Boss Too Hard podcast. You know, I'm a boy mom.
Yeah.
We do a lot of Marvel.
Yes. Love those boys.
Have you watched Infinity War?
Absolutely.
Okay. Thanos. We have our Thanos snap the finger.
Yes.
Half the population disappears moment.
Mm-hmm.
So in this instance, you're not killing half the population when you snap your fingers, but everyone does have to stop, listen, and understand what you're saying.
Okay.
Snap your fingers. What do you want them to hear?
Money is only an object. Money is simply a tool. It's simply something that you can utilize for yourself. It's not the end of everything. It's not the main purpose for everything. It's only one simple tool. And if you realize that there are multiple tools in the tool bag in order to build a house, in order to build a car, in order to fix anything, you have to use all the tools in the tool bag, not just one. So don't let money consume you, because that's not the overseer of all things. Okay. We still got to spend money. We gotta spend time, right? We still got to use our knowledge. Money is only one factor of that. Money isn't everything, but at the same time, you do need to understand how to utilize money and make sure that you are leveraging what money can do for you. Whether it's other people's money, go read my book, or if it's utilizing other people and their knowledge, expertise, or their time, right? And just plainly put, you have to understand that you don't have to keep up with the Joneses. Don't let social media continue to influence the lifestyle that you want to live. Just live your life. Because I'll say it again to you, okay? A Gucci belt and a belt from Walmart is going to hold up the same type of pants. A wallet from Gucci or Louis Vuitton and a wallet from Walmart, Target, wherever it may be that you got it from, it's going to hold the same money in there, okay? You just have to make sure that you continue to be the person that you are, because at the end of the day, we're all going to get a hole that's 6 feet deep. And that's where it is, because you can't take any of it with you. So.
This has been amazing.
Thank you.
It
was amazing.
So grateful that you took the time to be here. How do people get in touch with you?
Man, so you can always go to our website, which is www.theaccountinglab.co. Yes, it's .co, not .com.
I'm here for it. .co too.
You can obviously reach me on IG at @the_financial doctor. I am on Facebook as the same thing, at @the_financial doctor. I'm on X as the financial dr.
The book.
The book. Yes. So the first book is already out. The second book is about to come out.
Okay.
That'll be coming out later this fall, probably right before Christmas. But the first book is Your Financial Checkup, the prescriptions to mailbox money. If you want to just understand the starting point of how to, maneuver money, how to make more money, how to utilize wake up checks, or what I call them, how to get that mailbox money. Shout out to Nipsey Hussle, RIP. This is how you do so, right? So that book can be found on Amazon, but be on the lookout for this next book that's going to get really in depth, right? That's going to be called, it's a series, Your Financial Checkup series. This second book in the series is going to be Your Financial Checkup, the Conscious Money Mindset. Okay? The conscious money mindset. People need to understand conscious dollars and how we can utilize these dollars to make more money for us. So be on the lookout for that. It's coming real soon.
So I don't often give I'll give referrals. I give very, very few recommendations.
Mm-hmm.
And King was around when my mom died. It was a surprise. And there was some insurance money involved, and I did everything that I needed to do to get the insurance money. It's basically all my mom had. And I got the money in my bank account.
Mm-hmm.
And everything cleared. And a few days later, the insurance company had said they made a mistake.
Mm-hmm.
And that they wanted $70,000 back from me.
Mm-hmm.
And I remember calling you and freaking out because I was like, what do I do with this money? Let's put it to work. I was trying to be smart with it. I didn't want it to just sit in my bank account and we just blow it.
Yeah. Because
we know how easy that is, right? Especially when you haven't been raised with a smart money mindset.
Right.
And you took my calls. You never made me feel stupid. You talked to your team hey, what can we do in this situation?
Mm-hmm.
And it was all from a space of, how can I help this family get through this the best way possible? And that speaks volumes to your character. So thank you.
Absolutely.
Oh, well, it's not a good day here on the podcast if I don't cry. When people say that your network is your net worth, this is a prime example of that. Build your community. Ask to be in the room. Don't be afraid to be embarrassed. Mm-hmm. And give Dr. King McCray a call. Thank you so much for tuning in to this week's episode of the Boss Too Hard podcast. We'll see you soon.